and this is a very tough market to make sweeping observations about right now. My fallback is to talk about my own positions. Now, this isn't meant to be about me. It's meant to be about the charts that I have found on my own that I specifically think are interesting opportunities. I don't do it that often because there's usually all kinds of other stuff to talk about. Like next week when earnings starts ramping up, there'll be a lot to talk about there with respect to earnings. But there's nothing going on with earnings. There's nothing going on with any economic news. There's nothing meaningful going on with trade news. And, what we wake up to each morning is usually the same thing, which is everything's up about 1/5%, yawn. So, yeah, I'm gonna do, and the list is different. It changes all the time. But what we're going to do here is look at a couple of general things. But on the whole, we're going to thumb through those individual positions in alphabetical order. I'll just share a few words about each one. For the market in general, it's pretty green across the screen, up about 0.2% across the board. I'm pleased to see of my 18 positions, 14 of them are down, which is good because they're shorts, and 4 of them are up. And the worst up is they're not even up 1%, so pretty good. So let's dive in and do this. As usual, here's the spider. And as usual, it's right near lifetime highs. We're just hanging out. The past 4 days has just been a whole lot of nothing. Sometimes I say lots of smoke, no fire. There's not even smoke right now. It's just sort of lazily lilting its way higher. As far as that channel goes, we're a little above the midline, and there just ain't too much to say. So hopefully, with a few weeks of earnings news, that'll make things a little more clear. But as it is now, it's just like the summer doldrums, I guess. One tidbit of news, I suppose, out there is I heard Nvidia reach the $4 trillion market cap. I'm not stone cold certain of that, but I think that's the case, which is pretty interesting. It was only about, 6 years ago that Nvidia had a market cap of a couple of $100 million, and was basically, for those who knew it even existed, was basically a niche maker of graphic cards for serious gamers and Bitcoin miners. And now, of course, it's AI. And I don't know if this makes it the world's largest company, but if it's not, it's really close. So, yeah, another achievement for Nvidia. But having said that, and I don't touch Nvidia myself as a chart. I mean, God bless if you own it. It's just doing great. I don't touch it in either direction. But I do touch other stuff, and we're going to look at those right now. And I think this is an accurate list. Like I said, it changes a little bit from time to time, but just eyeballing it, it looks representative of what I'm doing. So let's go through these one by one. And like I said, nothing magical about the order except the alphabet. Interestingly, we begin with a semiconductor, which is AMD. And you can see from the get-go how different a chart this looks from Nvidia. It's nowhere near lifetime highs. And instead, it's just been for years now, or at least about a year and a half, executing a series of lower highs. There's the lifetime peak, lower high, lower high, lower high. And more recently, and this is common amongst a lot of these, I'm playing with a gap here. And so we've got this gap here. That's my stop loss. We got very close to it today, but we did not exceed it. And it's just, put it this way, if semiconductors do fall even a little, I suspect things like AMD will be a lot more prone to weakness than Nvidia will. So that's the first chart right there. And, these things are very richly valued, triple-digit PE, and this is a very mature company. So, yeah, semiconductors are very strong, but there's definitely those that I like on the short side. Here's BP, British Petroleum, and pretty obvious on this one. Just a whole series of rounded tops here. None of them super clean, but they're more or less similar. And this is a particularly good one. It's a particularly large one. Avis Budget Group, I think, is maybe the last rental car company that's still publicly traded, I think. Close to it at least. But These folks, as you can see, even from this multi-decade distance, have this tremendous rally. And it's not a very clean pattern, but it seems to me that we've just hit against this confluence of overhead supply. And I've got a nice tight stop on this one, just above 185. And this was down about 1.5% or so. Costco. This one is a very well-managed company, exceptionally successful in the long term. Shorter term, as we zoom in, it seems to be pooping out a little bit because, first of all, the lifetime high was back here in mid-February. We had a very powerful rally, but that did not even match the prior high. So we've got a lower high as of June 3. And it seems to be kind of softening up a bit, as you can see. And just eyeballing this, there is a minor level of support. We should keep an eye on something like, we'll just anchor it to today's low, something like that. So that may be kind of turning the proverbial corner. Delta, which is down just a little bit. I believe they report tomorrow. Let's find out. Let's zoom in on this. Yeah, it looks like they report before tomorrow's open. And in this instance, and this looks a lot like the Dow Transport Index in general, which, as a reminder, had a very good looking bullish pattern, blasted higher, started to sink, and then, fell into the pattern again. And so they wrecked it. So failed bullish breakout there. We've managed to rally back to that zone where the failure took place. Like I said, this is one of the very few stocks at all that's having earnings tomorrow of any note. So that'll be worth watching. But yeah, I've got a short position on that as well. Dollar General, also down a bit more than 0.5%. And we've got a top here, and we had a huge gap right here. And we've rallied all the way back. And I've got this a little tighter than the gap itself. Strictly speaking, the gap's up here. So 119.28. I've got my stop set tighter down at 116.30, which is a recent high. But you can see how that's been breaking down long term. Diamond, very general. This is up because it's very general, like the market as a whole. We'll see on that one. DLTR, kind of a companion piece to the DG trade. Same business. Competitors, obviously. And in this case, full day in a row. Okay, in this case, 107 is the stop loss on this. Kind of a different shape to the breakdown, but I feel we've talked about this at length some many weeks ago. Not to put too fine a point on it, but I think that being poor will be worse than it used to be. Being kind of working class will be worse than it used to be because the resumption of student loan payments and diminished employment opportunities. I don't think it's going to be good for your Dollar Generals and your Dollar Trees. And that's not why I went into these, but it's definitely kind of in the background haze of the decision. Most of it's about, of course, the chart itself. EL, Estee Lauder, I've shown you this one before, it's lost the vast majority of its value already. But things like this can just keep going down. And over the years and years, it's been executing a series of lower lows and lower highs. So that's a hold right there. FMC, now this one's up. This is a new one today. FMC is up a little more than 1%. Tight stop on this one, down at 44.68. China, I mentioned this one, I think, yesterday. So far, so good. It was weirdly up yesterday, but I held on, actually added some, and it's down about 1.5%. So that's good. Stop on this one, 37. Very gappy, of course, being an overseas based instrument, but 37 is the stop on that, and got a good price on that one, FXI. IBM. This one, even with the market in general so strong, this one has been weakening. It peaked right here quite recently on June 25th. It's been just kind of ambling around for weeks now. But that the lofty level it's at now, which is quite clear from this scale, as well as the fact it has stalled out while the market keeps kind of tromping higher, as of note. Micron, I mentioned semiconductors. This is another one. It's down almost 2%. That's pretty impressive on a day this strong. Pretty liberal stop on this one, 129.75, just above that level. And like I say, Nvidia lifetime highs, $4 trillion, SMH lifetime highs. Any semiconductor with weakness has my attention. Nike, down a little bit. Had a nice down day yesterday. Right triangle pattern, as I mentioned yesterday as well. Another semiconductor one. This one basically unchanged. Is unchanged. This is ON Semiconductor, symbol ON. We got on this one, let's see how close we got. I've loosened the stop on this a little bit, but let's just see in the strictest terms. Yeah, it looks like today we sneaked a little bit above that gap and we're below it again. So we have sealed that gap on. But just to give it a chance here, I early today loosened this up just a bit to this anchor point. So the stop on this one is 59.35. Just, 35 extra cents between friends. Occidental, down about 2/3%, like so. You can see the big distribution up there. Pepsi, mentioned this one a couple of days back. PEP, huge top on this, going back about 4 years. And this is just, I'm not saying it'll do the same thing as CNC, which crashed about a week ago, but it's a very similar pattern to Centene. A couple of more. These are ETFs. One is XHB. In this instance, this error on this one. I actually do not have a position in this, but I wanted to just mention it again. This is the Home Builders ETF. It's having a strong day today, and long term, relative to that big price channel, you can kind of see how expensive it is right now. And then the last one, which I am in position on, is XOP, which is down a little more than 0.75%. I've shown this one pretty frequently. The cleanness of this was ruined back really in early May. But I've still left that rough top drawn in there as a guide. And in this case, got to stop just above yesterday's high. So that's XOP. So in the 80 seconds remaining, the last chart I wanted to show, so we talk about from time to time, is Bitcoin, BTC. On the one hand, I was reading just yesterday about the tens of billions of dollars of Bitcoin that have been gobbled up by ETFs, particularly, I think, BlackRock's IBIT, I believe. There's been consumption of these things, just gobbling up like crazy. In spite of that, it's the same price that it was back in even December. So 8 months with gobble, 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 and the same price. So that's not that impressive. On the other hand, the chart looks awfully good. And it looks like it could easily rally from here. And the linchpin for that would be a clear new high, particularly. It's tough to say close because this really doesn't have trading hours, it's continuous. But if we got cleanly above, say, 112,000, it would be very justified for people to get excited about this on the long side. So it's very, very close. So interesting psychological factor out there that flows right over to equity land, even though it's crypto. So something to keep in mind. Okay.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.